Hello everyone, Kim here from the Traders Club. Today's October 21st, 2016, Tuesday. Market closed about an hour ago here, so let's look at the market and find out what has been going on. It's been about a week since my last update, and today, obviously before I get into it with the spider here, we're going to be looking at spider, we're going to be looking at Apple, and Boston Scientific. We'll look at three ticker names here. Obviously, Apple with the earnings reaction, we'll talk about it, see what we can expect going into this week and going forward, maybe next couple of weeks. We'll also look at Boston Scientific because Boston Scientific is something that I've been trading to the upside. And I am actually watching closely for a re-entry there. So I'll just kind of cover all of that. So Spider, Apple, and Boston Scientific today. Currently looking at Spider 65-minute chart, meaning each candles represent 65 minutes worth of data. And obviously, you know, on my last market update, we talked, and this was, I think, somewhere down here, just about a week ago or so. And we talked a lot about this vicinity, right? We talked about this level is an important level. Obviously, this level has been acting as an important pivotal level, meaning it was prior support that act as resistance. Also, on the last update, we also talked about potential inverted hammer candle there with a double right shoulder, as you can see. And so obviously, you know, ever since then, we've been really grinding a lot of up and downs. I can even draw these lines here. It goes up, down, up, down, up, down. So that's kind of this trendy action we're seeing as of today. Looking at more of a minor term perspective here, just kind of zoom in here. You can see we have cultivated higher high here and continue to cultivate higher lows. So as of now, as of today, looking at the micro term, though we've been seeing pullbacks after its pop, as you can see, benefit of the doubt actually go in looking at I'm talking about micro term, right? Benefit of doubt actually goes to buyers looking at more of a micro term perspective. But keep in mind though, we are in this kind of pretty heavily weighted downtrend resistance. So looking at more of an intermediate term perspective, looking at this 65-minute chart, we have this downtrend resistance, meaning intermediate term perspective, we have cultivating lower highs here. So this is what I would call a pivotal level, meaning if the buyers are not able to get above this falling resistance level, we could see volatility continue. The weakness may continue to the downside going into the rest of the week. So right now, this gap level that was open just about 2 days ago here, it is a current support. Very, very minor term, just last couple hours. That's what has been acting as support there. So I think if you're looking at this more of a minor micro term perspective, you know, and if you're a buyer here, you really want to see 214 holding, right? This 214 vicinity holding. And you're below that level, things can get a little bit hectic here, but we do have this rising uptrend support. So we have, as you can see, kind of a falling resistance versus rising support with this current horizontal support at work, right? We do have, as far as a candlestick is concerned, we do have kind of what it looks like, potential hammer type of candle there. Last few times, you know, you can see there's a little bit of hammer here. There was a little bit of that was more like a high wave doji type of candle there. And that was hammer there on the 60-minute chart. And obviously those candles might, you know, interpret it as maybe there might be some buyers coming in tomorrow. But again, it won't be confirmed until this thing clears about 214 for this hammer to confirm. If this thing, let's say tomorrow morning, we gap up, or if it continues higher, and if it clears above 214.43-ish level tomorrow morning, I think there's a good chance then this would continue climb higher, and it might attempt to, this is 214.43 here, it might attempt to get back up to retest that resistance. I think the important resistance becomes at that point will be then 215.20-ish. If this thing gets above 215.20, I think for sure at that point it will come back up here at 216 and to fill this gap. The problem though is that lately when the gap gets filled, it becomes a strong resistance. Meaning last couple times right here, do you see that this gap right here? This gap got filled and then this thing tanked, right? And then there was another gap. So buyers are really attempting to really bring it back up in the minor term after finding some support here. But once that gap was filled, this thing tanked yet again. So again, even if we get above this falling resistance, there's another gap here and there's a lot of fear looming. So obviously, again, last several occasions when the gap gets filled, buyers get really nervous and really anxious, and then they start just exiting, right? I'm talking about short-term players here. I'm talking about short-term, couple days, day traders and all these people, right? And so whenever that happens, it seems like these guys just hit that exit button and then just everybody starts to panic, right? So I think that's the level to watch should the price continue higher to the upside next couple of days here. So again, 214 to watch. Obviously, if this 214 level, if we lose that level to the downside, then I think at that point you would watch this rising uptrend support. There's a good chance this could continue to fizzle lower, and I would have to guess that they're in this vicinity, somewhere in that vicinity around 213-ish level. There's probably going to be at least some kind of buyers, at least for a couple hours, to retest and to see if this rising uptrend support could hold, right? So that's kind of what we're dealing with here. And I do think that the volatility could continue, that there might be a lot of ups and downs, a lot of gap ups, a lot of fallbacks and things like that. Looking at more of a big picture, looking at more of a primary term perspective, we've been talking about this 210-ish level, right? I mean, this whole level is a very, very important level. And we've been talking about this for months now, and this is a level to watch. And obviously, we did find support here back in early September, and mid-October, we also find some buyers in that vicinity. That's why we saw a little bit of that bounce here just last few weeks. So that's kind of what we're dealing with, looking at more of a big picture. We are still kind of, respecting this rising uptrend support. This is a reason why I've been telling you guys that when you draw these uptrend support level, use the band of support, not just precise, line, because that's what the market doesn't really care about your line. It's the vicinity that it matters. It's this vicinity where buyers came in here, this was a Brexit panic, and then we are seeing some short-term buyers. So we can see that we got this resistance, and then we got this rising uptrend support, and we have this horizontal pivot. Why do you think the market has been just grinding in that vicinity? This right here, 210 level, is an important level. This is a reason why technicals are very, very important in your trading, so you can understand these levels, right? So looking at Spider here, obviously we're still grinding. We still don't have a definite direction at this point. But I think anywhere for this to really attract buyers to the upside, I think this thing needs to fill this gap right here and overcome that gap fill resistance fear, and then stay above, I would say, a good amount of 217. I think anywhere above 217, I think this is a level that probably a lot of buyers is going to attract a lot of buyers. And obviously we do have another gap at 218-ish level, but I think once it gets above 217, at that point, this is going to become as a kind of a strong support. and then it could actually make, it could actually have that kind of momentum, because we already had this kind of momentum, and this thing gets up to about 217, we'll have a whole lot of momentum at that point. Again, I'm just, if the price gets well above that, and probably, I'll update you guys on that maybe next week. Another possible scenario would, if we actually get up here at 216 and then falls over, and then we find some, support in that vicinity about 213. Kind of watch out for this potential inverted head and shoulder reversal. Again, I'm just giving you a potential possible scenario, so that's just we would have to see how that's going to play out here. But keep in mind, looking at a big picture here, we are still in an uptrend. Do you understand that? Do you understand that we're still in an uptrend, right? This is an uptrend. We have higher highs, we have a higher lows, and we are kind of dealing with that higher low vicinity. Now, again, I'm not sure at this point if this is going to just get a plunge there, or if we're going to actually support, if we're going to actually see a support in that vicinity and buyers coming in and bring this thing back up. But in the event that if this thing gets back up, this will be served as a strong level of support. So I think that's why there's a lot of fizzling going on here, because we are dealing with an important level at 210. And so right now we're just kind of, there's a lot of anxiety, I think more on a short side. There's a lot of anxiety in a short side, because they know that we are still up here. We are still holding this vicinity. So looking at a more big picture, I'd have to say benefit of the doubt goes to the buyers looking at a more of a big picture. So that's kind of what I see in the market. Let's actually go to Apple here, and actually let me go to 65 minutes, and then just kind of look at the current level here after a year earnings report reaction. We are holding this vicinity. This is what I would call kind of a stair-stepping pattern here. Old resistance becoming a new support, and that's kind of why after that shakedown, we are kind of finding some support in that vicinity at 115 there. I think as long as we find some support in that vicinity, I think there's a good chance it could find some bounce and get back up to the upside. Obviously, I'm still holding half of my positions. First I went long right here at about 107-ish, and I closed 50% of my calls at about 118.10 or so. And I'm not just saying that. I documented it, because there's so many skeptical traders out there that I'm just saying things. Actually, if you can go to journal my call options on Apple, I've been updating since September 6th. Again, obviously you can see that this is where I enter 107.66, and just to verify it, so I'm not just saying stuff, right? So you can see that that's where I close at 118.10 precisely, right? So again, I'm still holding half at this point. So we are getting pretty close to 120 there. This is the kind of a gap fill area. So right now we are just kind of in that vicinity around 115-ish with the ER. So I think if that level don't hold, there is a gap, another gap. Again, something that I've been letting you guys know is that a lot of these gaps, when they get filled, they do act as instant support. So let's say if this thing continues lower, there's a good chance there might be some bounce in that vicinity. Obviously, we do have this rising uptrend support again. If this thing heavily comes down, at this point, as of today, I don't see that happening. Not because I still have my call positions. We don't have the evidence of that. Maybe next couple days, but as of today, we don't have evidence of that. Next support I see is at 114.14. But if we lose that support, that gap fill support, I think then will be that 111, which is coinciding with this rising uptrend support. Again, something that I always say, that don't be so obsessive with these support levels, because sometimes these support levels can be broken. Like here, this is support here and here. It broke one day and then trapped the shorts, and then this thing just got right back up here. This is the reason why you want to kind of draw your support with the, more of a thicker marker there, so you understand that this is the vicinity that matters. And so that's why this is the reason why, I actually went long right here on this day, and then this thing tanked, and this is the reason why I held through it. I wasn't panicking just because it got below the support, because I was understanding more of this big picture that we're on an uptrend. So again, we're still in an uptrend, right? Do you agree with me that this is an uptrend, right? For this uptrend to be dismantled, what you want to see is this thing start to cultivate lower highs and lower lows until you see that we have to give benefit of doubt to the buyers in the intermediate term. And obviously, I don't do anything short term. I don't day trade. I don't hold things for a couple days. So, you know what? Couple days shenanigan doesn't affect me. I really don't care. I think a lot of you do. And again, that's your game. That's great. But I really don't care about a couple days of pullbacks and shenanigan. And also looking at a big picture, this is, what we call a neckline. Looks like this big double bottom. And obviously I talked about back in, when was that? I talked about, if you want to look at a big picture analysis, right here. This was back in July 26th, 2016, July 26th. So that was just about, 3 months ago. And you can look at my long-term analysis work here, why I believe that Apple, four reasons why Apple has bottomed. And I mean bottomed. Like this thing is ready to climb higher, make new all-time high, and continues higher. This thing is somewhere, look, as far as the sentiment is concerned, we are looking, what I'm saying? That's a basing period, and that's what we did. This is a neckline. We cleared that, we retested it, we bounced off of it. That's exactly what happened back in 2013, right? This was the neckline, right? And then when you draw these pivotal levels, you want to draw with your band, and right there, we retested it, and then you see what we saw. And I think we're going to see something like that, looking at a more of a big picture. So I'm bullish on Apple in a big picture. And, I tweeted out earlier and I said, any steep decline will be an opportunity to buy. But obviously, I don't think whatever we're seeing right now, I don't look at that as anything steep decline. We're down, 1.5%. That's not steep decline. What I mean by steep decline, if this thing would have came down maybe, anywhere in that vicinity, like 110 or 111. That's what I was talking about. But we're just somewhere about here right now. So not a huge deal in my opinion. Apple remains bullish in the intermediate to primary terms. So I'll continue to honor that. Actually, where's my moving averages? Let's actually put some moving averages here. So we can do maybe some moving averages analysis. And obviously, we're 1020, they're still rising. Obviously, it's going to be down tomorrow. I don't know how it's going to play out, before market opens. But that 20 MA right there, that kind of a greenish color moving average, that might be acting as support if the price down. Obviously, looking at the long-term moving averages, these moving averages are showing us that that is what we call a golden cross. And when we see that golden cross, it favors the buyers long-term. You can see this is a dead cross, golden cross. I have a video lesson on this, the Beginner's Guide to Technical Analysis, lesson 1. I talked about specifically on these moving averages, long-term moving average, how you can trade off of them. You can go check that out. Anyway, so that's what I see on Apple. Still looks bullish to me. I think obviously if this thing comes down, watch look at these levels of support. 115.22 and 114.28 will provide at least some kind of support going in the, at least remainder of this week. So let's go to Boston Scientific and I end the video with this. Let me get rid of all of that. So Boston Scientific, obviously we've been trading this to the upside here and here. And again, for those of you are skeptical of my claims, because I'm not just gonna say things, Obviously, you can go. There's articles here, part 1, 2, 3, 4, 5. So you can see I didn't update it every week like Apple did, but I've been updating this. This is back when we first initiated on 13/22. Ever since then, this thing, can see this thing moved up here, and this is how we played so far. So we closed out all of it at 24.43. 24.43, and that was precisely right here. And I just let you know, I can't, I know as soon as I closed completely, it started, started tanking, and I can't do that all the time. It's just this time was just it just played out well this time for us. And so for me, in my opinion, any steep decline is an opportunity to buy. Earnings tomorrow morning before open. So I don't know if it's going to fill this gap. Last time, though, this was an earnings gap, and this thing started deteriorating, and we did fill this gap. But this was when market was really shaky back in September 2015. Market was very, very shaky, so Boston Scientific came down, and obviously, we found support. This is what I mean, is that gap was filled and instantly acted as strong support and got back up here. And it came down again, but we found support in that vicinity and got back up here. And the that was April earnings. We had a good earnings there, and then now we have earnings coming up tomorrow before open. So what I have to figure out is sometimes gaps don't get filled. They act as support. Right here, this was earnings gap right here. This was back in 2013 July. Right here, you see that? This gap. There's people always say that gap must be filled. No, the gap doesn't always have to be filled. Sometimes it does, sometimes it doesn't. This gap from July earnings, that gap was never filled, and we actually found support here, and then this thing bounced up. So again, looking at a big picture, I am bullish in Boston Scientific. I even think that this will come up here. I mean, for probably it will take a couple years, maybe even 3 to 4 years, but I think this is something that will continue to, I can continue to trade. So right now I'm looking for a pullback. I have to see if we're gonna fill this gap. If this, okay, here, I'll tell you this one thing. If this, I don't know if it's gonna happen. Let's say Boston Scientific fills this gap at 1980 right here. Just go long there. Just go long there. And again, I'm not talking about day trading. I'm not talking about swing trading couple of days. I'm talking about position trading. And just go long there once gap gets filled, and then hold, for about, 6 months, a year. And I think there's a good move that would see to the upside. But again, I don't know at this point if that gap is gonna get filled, or that 100, 200 SMA. This is a 200 SMA there, simple moving average, 200-day simple moving average. That is a precisely residing at a level with a gap open level. A lot of times also that gap open level could act as support as well. Recently though, you can see that this gap was filled. You see that gap right there. So I'm just going to zoom in here. So that could be the level, could act as support. But if this thing gaps down, or after earnings, bad earnings or bad reaction, then I'll be watching very, very closely to find the good level to re-enter. But again, at this point, I do not know when, because I have to see a potential level of support there. But again, man, Boston Scientific has just this beautiful uptrend. I mean, this is what you call primary term uptrend. Higher lows, higher highs. This is a reason why you want to find a good trending stock like this, and it's best to hold these kind of moves to be able to get the most of it. It's run there. And I'll continue to write about it on Boston Scientific when I do enter. But for now, I'm watching close there. Minor term sentiment is bearish. Obviously, we have, all these moving averages crossing over now. We're below the 100 SMA. 100 SMA is actually flattening out. So that tells us that the primary term uptrend is slowing down. Doesn't mean it's dismantled. Doesn't mean the whole thing is going to crash. It just means that it is slowing down. You can see the 100 SMA started falling, and then we started seeing a lot of volatility, but we found support here, and this thing yet again got back up. So I'm waiting to see where it's gonna find some support before this thing sees another move, possibly to about 30 or so. I'm guessing here we got some pivotal level around 30 there, so that there might be the next target or so if this thing does find some support at certain levels. I'm not sure where. So that's everything. Have a great Tuesday night, and maybe I'll look at the market this week and see how the spider plays out going into tomorrow. Just one last look here. Actually go back to here. So it will be interesting to see if 214 level will hold tomorrow, or if we can maybe, you know, that hammer candle there, maybe some kind of pop in the morning. I'm not sure at this point. So it'll be interesting to see how it plays out going into the remainder of the week. You can always follow me on Twitter and StockTwits. I do in between my videos, I do tweet out charts. Again, I don't use dollar signs, so if you don't follow me, you will not see my charts. And the best way to always connect with me and get updated on my videos and articles, you can always put your email address here, and that way you will never miss my articles and videos. Again, have a wonderful night. I'll talk to you on the next market update video.